Hi, good morning, and welcome again to another edition of Market Analysis for today, August 21st, 2023. My name is Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. So, the world will be watching Fed Chair Jerome Powell later this week, and markets may not like what they hear. The stock market tanked after Powell's Jackson Hole speech last year as he championed the central bank's commitment to fighting inflation despite the economic pain, signaling the path of rate hikes ahead. While the circumstances are different this year, his comments could still ring more hawkish than the market is expecting. A year on, and the dilemma facing investors isn't how much higher rates will go, but for how long will they stay high. In this regard, Powell could issue another wake up call. Focus has shifted recently to the possibility of rate cuts next year, something the market initially incorrectly predicted for later in 2023. The market is currently pricing in the first rate cut in May 2024. Goldman Sachs economists said last week they see the first cut in the second quarter and then 25 basis points of cuts per quarter. Powell has consistently said the Fed's battle with inflation is far from over. There's a chance he could dampen or even shoot down rate cut expectations. The long-term field of this year's symposium, the theme is structural shifts in the global economy, raises the prospect of an adjustment to the R star, essentially the neutral long-term interest rate when the economy is theoretically at equilibrium. If the Fed chairman mentions this potentially needing to move up, then it could signal a new era of higher interest rates and ends hopes of a return to lower levels. The bond market appears to see that shift coming. 10 years hit their highest level since 2007 last week, and we most likely will pass that resistance level, if we will. And then Powell want to cause a second year of market shocks at Jackson Hole, but he'll want to make the Fed stance clear. It's a tough balancing act. So, what can we expect for the markets for this week? Initially, we see how the Nasdaq itself is having a nice start to the week, having a green day at the beginning before the open at least. We see how the market has on Friday created an inverted hammer, if you will, and that obviously this is the signaling a change in course. So we most likely perhaps see some sort of momentum picking up early in the week, but we could see also a continuation of the sell-off. So be wary, have your stops very tight. Anything to the upside could be short-lived. Again, 15,000 is gonna be that psychological resistance level, just because prior to that it had been a support level of obviously 15,000 psychological. So if we do continue to move up to the upside at the open, that could be short-lived. So I'm actually just speculating that we could probably come up to where we have a higher of the session today, or actually, well, a European session, and see if we meet that high and then just retrace again. So keep that in mind, as well as for the S&P. S&P here we see how it is trading also to the upside. A nice little gap up. It opened up today. No, we see a doji really here also, but also they're not signaling a change in direction. So short-lived to the upside is those moves to the upside are could be very short-lived. So then we have the Dow Jones. Dow Jones has a mark over the doji precisely. So I have a tighter resistance on the Dow. So that could be short-lived. However, for Mr. Crude Oil, we have a hammer, nicely hammer. So market is changing directions. So let's see if we could meet that high of August 14th at around $83.100. So long on the crude oil. Nat Gas is also it's just really kind of ranging as within Friday's session. So I could contemplate or speculate, better yet, that if we do see a move to the upside, it would also be short-lived. So keep that in mind. Now, gold seems to be nicely recovering. Okay, so here we have another doji, change of direction, change of trend. You see 1900 is that psychological resistance level for it initially. I have my 1904. We most likely would be that would be met. Now silver has a parabolic movement to the upside. 2350 is my resistance for it, going long initially. Then we have copper that is kind of looking to find its way back, to continue with this rally to the upside, but could we see just a little exhaustion on this movement to the upside? Let's see if 370 internally could be that support level for it. But right now it's trending lower. Then we have Bitcoin. That Bitcoin we just really, after being flattish for really a week or so, then it just tanked. This was really in the works. You never know which way it's going to go, but when you see this very flattish lines, or at least equal highs and equal lows, then you could call that a ranging scenario, consolidation, whatever you want to call it. But the market is really just same highs, same lows. After a couple of days, it's just building that pressure, and it will pop either to the upside or to the downside. In this case, was to the downside. So breakout. Well, now how will that breakout continue? It seems to be the case, and I'm using 25,000 internally as my psychological support level. Initially, I have mine at 25,810, 17, but that's most likely going to be met. Then we have the currencies. There are currencies looking to recuperate themselves after really just having several sessions to the downside. So we could probably come in and speculate that this will happen and meet 109 again, stay north of 109 again. Let's see if that happens. Also, the pound is looking to stay north of 125.50, come back up to 128, and that could happen if the dollar index just happens to tank down to 103, 102.80. We will see that rally on the currencies, on the metals, most likely. That's it for me today. Have a fantastic trading day and week ahead. See you tomorrow.